Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleague Surabhi, and Mangalam is joining in today as well. Guys, hi, good morning.
Good morning.
Morning, Prashant. Morning, Mangalam. I don't care what the cues are today. The most important cue, you guys already know it. It's the weekend. It's Friday.
Well, it is Friday, but the kind of news that we have is worth 3 Mondays, I guess. So much happening. The unexpected resignation, that's what everyone's going to talk about today.
Oh, yeah. That and of course, it's not as if the global news flow is abated, right?
Yeah.
I was telling someone that same time last week seems like such a long time ago, right? It was almost like a year ago because so much has transpired in the last 4 or 5 days. So let's start by telling you what happened overnight, what you need to know, and just set you up for the trade this morning. So the news is all good. This is different from what the previous few sessions have thrown our way. We have a strong rebound, strong broad-based rally in the US market. And I say broad-based because if you look at the NYSE advanced decline ratio, it's about 3:1. 3 up for 1 down. So this is good news. Russell 2000, the small cap index also went up sharply. The S&P and Nasdaq are up on your screen. Now, the trouble spots, which are banks, also did well. So you look at the European Bank Index, which has been the epicenter of the crisis recently, 1%. And you've got the US Bank Index measure, which went up about 2.6%. Again, sort of decent news flow. You have news flow, not bad, or some are saying, well, this is not good either. But for what it's worth, you have a consortium of 11 banks coming together in the US and putting in a $30 billion deposit into First Republic Bank, which was one of the banks which was also looking a little shaky. This is not equity. This is just uninsured deposit into FRC, which has been announced. Some are calling it a creative private market solution, which basically allows the government to stay away and not put much of its money on the line if need be with other banks, etc. But this is interesting. This did help sentiment overnight, and I think the rally in banks in US overnight started after this particular announcement. US yields have had an absolutely wild ride, and yesterday they went up about 12 basis points. We are back at about 3.58%. So that is the yields for you. Data also, by the way, we had 2 or 3 data points, macro data points, all of which were calling for the Fed to hike rates next week, right? So market is very quickly priced back rates, priced in rates once again from the March FOMC, which is on the 22nd. They'd completely gone to zero. Well, we are back at a solid 25 next week. Well, before the Fed, ECB met yesterday, and they've hiked rates by 50 basis points. Despite that, this is largely being seen as a dovish hike because they completely scrapped and shied away from giving any future guidance. In a way, I guess makes sense. They want to insulate themselves from all of the uncertainty, saying something right now and being caught in it because things change. So no forward guidance, and that's the reason why this is, despite the 50 basis point magnitude of the hike, is being seen as dovish. Now, let's just quickly come to the local market here. Nifty and Bank Nifty both saw a positive daily close after 5 sessions of losses. This is, I think, unambiguously positive. We've not had that for 5 days. 5 days of sharp cuts, about 800 points given back, and yesterday a feeble pullback, but a positive daily close. Now, the Nifty needs to protect the low of 16,850. We had various technical analysts coming in and saying, basically, there is a gap at about 16,800. 16,850 is what the market got to, so that becomes the level which the market needs to protect after the gap up this morning. The levels on the upside are 17,220. This is a sort of a technical level. We want, and I've been putting this out for the last 2-3 days. Once the Nifty starts trading above this for some time, I think it's a kind of a short-term reversal level. Above this, right, I'm probably saying too much too fast, but 38% retracement of the fall, recent fall, which has been 19 days worth, is 17,340. So 17,220 and then 17,340 are the two levels. For the Bank Nifty, again, we saw a positive daily close. Yesterday's low of 38,613 should be protected. Upside levels on the Bank Nifty are 39,740, which is the short-term reversal level, same for like for the Nifty. And the retracement for the Bank Nifty is 40,296. The Fibonacci retracement then comes in at 40,296. I just want to end by saying this, that people have been anticipating a bounce, a turn, which has not happened. Markets have been sold on every rise. So there is this feeling of burnt fingers. And I think that should keep the market light, sentiment fragile, and a bit jumpy as well. So keep that in mind as you look to trade these markets. Yesterday in the morning, the call was better to just stay out. It's just too volatile. And I think unless you see the market trade up for a while, I think better to just wait and watch once again this Friday morning. Surabhi, hi.
Hi, Prashant. Morning. So, I've been wondering what to call this. Is it a Friday filled with relief, or is it just an uneasy temporary calm that we've got for now? I think we'll have the answers in due course. But I just wanted to take off from what you mentioned on the ECB. I think yesterday what we got from the European Central Bank was a very fine balance. They managed to keep the markets happy despite raising rates by 50 basis points, and the commentary remained very sort of accommodative in the sense that, giving the market an indication that we're really there. I want to put up Christine Lagarde's quote, and I think that was a very interesting statement that she came out with. She did go back to the GFC parallel, saying, I was around in 2008, so I have a very clear reflection of what happened and what we had to do. We did reform the framework. We did agree on Basel III. We did increase the capital ratios. The banking sector is currently in a much, much stronger position. That was a remark during the press conference. And I think a lot of that body language, the positioning, the posturing, the statements, all of that worked very well for the market, at least yesterday. And that really powered up the relief rally. The euro moved higher. I just want to mention the dollar. The dollar is doing a very interesting thing this morning. It's again climbing down very sharply. Now, if the expectation is that the Fed is going to take a cue from the ECB and hike in the coming week, why is the dollar declining? But there are so many other factors at play here. It's not a unilateral move only on one cue. So that's the dollar index for today. Now, the other cue, which Prashant alluded to, this coming together, this, brotherhood of banks on Wall Street, literally, where you have all the big boys saying, don't worry, we're there. Now, what have these guys done? They have gone ahead and parked deposits with First Republic Bank. There's been a lot of chatter. In fact, CNBC has been also, putting out some source-based stories saying, why not go in and put in equity or look at buying the bank or do a merger? Now, that's the bigger question, because there's a fear there that as far as the bond portfolio of First Rand Bank is concerned, there are losses. There are lots of mark-to-market losses. There could be a big hole. So you don't want to park equity, but you're putting in deposits right now. So the top banks, the top four, are putting in about 5 billion each. Then the next strong, Morgan Stanley and the others, they're putting in about 2.5 billion. Then you have a clutch of smaller banks coming through. So it's 30 billion coming in. Is it going to be enough? I don't know. By the way, the stock, First Republic Bank, moved higher during the actual trading hours, and after hours, it's again down 15-16%. So I don't know if the last of, this whole monster of the banking crisis monster, if it's behind us or not, but we need to watch this script very, very carefully. Back home, the added sort of twist to the India tale is TCS. It is a company-specific issue. It's got nothing to do with the overall market sector, but it's going to be a talking point. It really will be, because the market was absolutely blindsided, didn't see this coming at all. Actually, no one did. It was a very surprise announcement. So Mr. Gopinathan will stay on till September as that transition sort of plays out, and, the new man in, K. Kirthivasan, he comes in. The good thing is he's been pretty much a TCS lifer himself. He's put in 30+ years with the company. So nothing is new with respect to the architecture, the culture and all of that. But just that the transition is happening at a very wobbly time when the IT sector has plenty of challenges to deal with. So we'll watch out for that, Mangalam. So as you said, I think there's, though it's a Friday, but there's plenty to keep us absolutely glued to the screen and at the edge of our seats.
Glued to the screen, edge of our seats. What we can also do is that, if the analogy of everyone pulling something in different directions and eventually the thing moves nowhere. Is that what we're looking at as well for our markets? A range and extreme volatility. Because yesterday as well, we had 3 rallies and all of them were sold into. It was a volatile session, and part of that could also be attributed to the fact that there was weekly options expiry towards the last hour of trade. But for all that's worth, we managed to close positive in the green after 5 sessions of declining. And how much did we lose in the last 6 sessions? 770 points. 16,750 to 16,850, extremely important as a support. And that's primarily because that's where we started the decoupling from. 16,750 in September was the low, from where we rallied about 13% in October and November. Cash market flows, again, all over the place. Nimesh said that there was a fair amount of buying at the institutional desks, etc. And that reflected. The FIs sold just about 282 odd crores, but a large part of that is also, factored by a lot of the large trades that took place. What's not supporting the market is the relentless selling by the FIs in index futures. Yesterday, again, 1,815 crore worth sale, and now they've started to give the split between Nifty and Nifty Bank. For the first time in a long time, we've seen higher selling in Nifty Bank than Nifty itself. So 1,000 crores worth selling in Nifty Bank, 823 crores in Nifty itself. FII longs, 11%. So that means effectively 9 out of 10 positions are on the short side. What does that mean? The net short exposure at 1.63 lakh contracts is the highest that we've ever seen. And I went all the way back to March 2020 as well, the pandemic lows. It was around 1.58, 1.6, never 1.63. So there is a fair amount of shorting. Everyone's on one side. At some point, something's got to give. Will it? Is the big question.
And then we'll have the stampede, the bears running for cover and a bull stampede whenever that short cover.
Whenever that happens. Again, but like everyone's been saying, it's a hope and not any data that suggests that there could be an up move. The SGX Nifty indicating an uptake of almost 121 points, and this is a God-given for bears because they love selling at the top. We've seen gap ups being sold into. Prashant spoke about 17,200 as an important mark. 14th and 15th March, the highs on the Nifty were 17,225 and 17,211. So that is a big resistance. The only swing factor for today, for us, could have been the Nifty IT. Why is that? Because Nasdaq rallied about 2.5% yesterday. But then again, that has been pulled in the other direction by TCS, which the management change has happened while everyone's talking about it being a company-specific issue, but it still has 4.5% weight on the index, the Nifty itself. So a lot of things being pulled in a lot of directions. Eventually, do we move anywhere or not is the big question. Edge of the seat, best view. Ringside view is better than, buy side or sell side today.
I thought you talked about the best views at the Wankhede Stadium today.
Yes, it is. But then for what it's worth, that will happen after
markets.
the markets.
All right, let's quickly get started then. Now we have the equity call coming in for the morning, and this is a call from Christopher Wood of Jefferies, who says 2022 was the year when US equities suffered multiple contractions from monetary tightening. He says this year will be the year when earnings downgrades hit stock markets if US recession forecast proves to be accurate. He adds that 2024 will be the year when markets will have to deal with the emerging credit problems in the private space. He says greed and fear has been recommending to macro investors a long bond and short loan trade in the US. But he adds clearly the question when leveraged loans should be shorted outright. He says this would seem as a good time as any if the recession forecast for Jefferies' US chief economist is accurate. That is, the US is heading for a 5-quarter recession, which will commence in the 3rd quarter.
All right. On that note, let's also get you some money market views. Bhaskar Panda of HDFC Bank says a rescue package for mid-sized US bank facing liquidity crisis and the announcement that a Swiss bank will have access to liquidity from Swiss Central Bank have calmed nerves across global financial markets. But he says that the ECB has raised interest rates by 50 basis points as expected, and eyes are now on the US Fed against this backdrop. He adds that oil rallied mildly and the dollar index is a bit soft. Given this global backdrop, he expects the USD INR pair to trade in a range of 82.50 and 82.75 per dollar.
Well, on the bonds, Bhaskar Panda says that benchmark yields have been mildly lowered, tracking global cues and consolidation will continue. Hence, he expects the 10-year benchmark yield to trade in a range of between 7.35 to 7.4%.
Well, we have a lot of stocks to talk about as well, along with that market action. So in just a bit, this is the list that we're covering on our top 10 segment. We'll be looking at Z Entertainment, Voltas, NTPC, Glenmark Pharma, Bharat Forge, Hindustan Aeronautics, RVNL and GMR Airports. These are stocks on the radar on the back of positive news flow. TCS and Samvardhana Motherson are stocks on the radar because of some negative news flow that surrounds them.
All right, let's get our first voice, and this is, of course, has to be a global one to begin the day. Daniel DiMartino Booth is CEO and